Hey guys, my name is Roger, and I know that buying a home can be a really daunting process, especially if you're not sure where to start when it comes to your credit score. So in this video, I'm going to show you some easy steps so that you can take the steps now to make sure that by the end of 2022 and 2023 that your credit score is ready for prime time. So let's jump in and get started. So if you're planning on buying a home in late 2022 or 2023, it's important to start preparing your credit score now. So in this video, we're going to discuss the steps that you can take to get your credit score in tip-top shape. We'll also provide some tips on how to improve your credit score if it's not where you want it to be. So by following our advice, you'll be well on your way to securing a mortgage for the home of your dreams. So one of the most important things that you can do now to prepare your credit score for a mortgage is to make sure that you're paying all of your bills on time. So this includes not only credit cards, but all your other bills that may be on your credit report, like utility bills, phone bills, or medical bills. And if you have any outstanding debt, now's the time to start chipping away at that. The more debt you can pay off before you apply for a mortgage, the better. And another tip is if you sometimes have lost credit card statements in the mail. It's happened to me. I never get a statement and I missed a payment on my credit card. This happened once a couple of years ago. Just set up auto pay for the minimum balance just to make sure you never miss a credit card payment. In addition to paying your bills on time, you can also try to keep your credit utilization low. Credit utilization is the percentage of your available credit that you're using at any given time. For example, let's say you have a credit card and you have a $10,000 balance on it. You always want to keep the balance under 30% or $3,000. So whatever the credit limit is on any credit card, keep the utilization at 30% or less. The reason for this is because lenders might see high credit utilization as a sign that maybe you're struggling to make ends meet. So you definitely don't want that to convey to the credit agencies and to the mortgage companies and have a lower score. All right, so if you're not sure what your score is, or if your credit score needs some work, there are a few things that you could do to find out and improve it. You can get a free copy of your credit report from each of the major bureaus, Experian, Equifax, and TransUnion, once per year at annualcreditreport.com. You can also check your credit score on free websites like Credit Karma and creditsesame.com. However, these scores on Credit Karma, creditsesame.com, or your banking app may not be accurate. So that's the only downside. It's good to have some kind of baseline, but I've seen them be inaccurate by as many as 20 to 40 points, but at least you have some kind of idea. Finally, consider talking to a credit counselor to help get your finances in order before you start the home buying process. The next tip is you never want to close credit cards. Even if you're not using a credit card, having an established credit line is good for your credit score. So if you have any old credit cards that you don't use, hang on to them and keep them open. Even if there's a $50 a year annual fee, having a long-standing credit account that's been open for a very long time will help your score. And if you have multiple credit cards that you're only using one or two of them, try spreading your charges over more than that so that all of your credit cards get some action. This will also keep your credit utilization low, which is another factor that goes into your score. By the way, if you're enjoying the content, please hit the like button and subscribe to my channel so you don't miss any of the videos. I really do appreciate it. This may be a harsh reality, but you must live within your means. One of the quickest ways to improve your score is to pay off debt, make payments on time, and if you can, pay more than the minimum payment. And if you cannot afford to pay off that charge at the end of the month, or if you don't have the money to pay for that item in cash, do not buy it. Don't put it on your credit. All right, so also, if you have any collections account or late payments in your credit history, now is the time to start working on fixing them. Collection accounts can really stay on your credit for up to 7 to 10 years, even if you pay them off. So if you have any outstanding collections, it's important to get them taken care of as soon as possible. You can do this by negotiating with the collection agency or creditor and coming up with a repayment plan. Once you've made all your payments, make sure to request proof that the account has been paid off and keep that for your records. At a minimum, you want to have at least 3 open and active credit accounts. So some people might think that just having one card and having a low limit and you just use it a little bit and you pay it off is good. It's actually not good. You want to have more credit to show the agencies you can handle multiple accounts. So it also shows lenders that you're using your credit responsibly, and it helps improve your credit utilization ratio. So the more limit you have, even if you have a big expense that comes up and you use a card to pay for it, it still keeps your credit utilization low, which is one of the most important factors when it comes to your credit score. And if you don't have any open credit cards right now, now's the time to start. So a few things you could do is you can consider opening a secured card, which is the type of credit card that requires a deposit, or you can be an authorized user on someone else's credit card. So adding your name to someone else's credit card with an established history can help your credit score a lot. All right, so one of the last things that you can do to improve your credit is actually start building an emergency fund. So this will help you just in case there's some kind of financial setback or an emergency. That way you don't have to max out a credit card. Again, we talked about credit utilization is one of the most important things when it comes to your credit score. So start saving some money for an emergency fund. So if something comes up, you're not just maxing out a credit card, but you can use that emergency fund instead. All right, guys, so one more thing you can do is actually talk to a mortgage professional like myself. And the reason is we have tools that may not be available to the public. So as you see here, this is a copy of my credit score. Don't worry, my social is not on here or anything, but basically as a mortgage professional, we have certain simulators. As you could see below my credit scores, there's a +14, +15, +7. That means there's something on my credit that can be improved. And if I just click this button, which I can't go into detail and do all that right now for you guys, but basically what this does is this tells me exactly how much I would need to pay down. For example, my TransUnion, if I want to get that to 760 or get my experience to 760, it looks like it's possible, and it will tell me exactly what to do to get my credit score to the next tier. That way you get the best mortgage rate possible. Otherwise, you're just shooting in the dark. You might pay stuff off that might not actually help your credit score. So these simulators will tell you exactly what to do to get your credit score up to the next tier. So guys, if you follow these tips, you'll be well on your way to preparing your score to buy a home in late 2022 or 2023. So thank you guys so much for watching, and I'll see you guys on the next one.